Home buyers and the real estate sector have very little to cheer today. The Reserve Bank of India pulled in a big surprise by leaving the key rates unchanged. This despite the possibility of growth getting impacted with consumption shrinking with demonetization. This is contrary to the wider expectations of the industry, especially the real estate sector, which was hoping for a rate cut of at least 25 basis points, which would translate into lower rates or home loan rates as well. However, the banks would get a major liquidity boost with the central bank withdrawing the 100% incremental cash reserve ratio or CRR requirements from 10 December. What does this mean for the already sluggish property market? These are some of the top voices from the industry.
I think there was a huge expectation, not only in the real estate sector, but in the general economy and industry and private sector and the retail segment and the services sector, that there would be a rate cut. This, of course, has led to disappointment across the board. The RBI has its own reasons. It's been saying that they've done 1.75% rate cut since 2015, and the benefits have not been passed on by the banks to the individual customer. Hence, they don't see any good reason to pass it on. However, I think it is on a personal level to believe that some rate cut would have actually helped the market, if nothing else psychologically.
So I think, there are 2 points here. One, the interest rates are bound to get reduced because the kind of inflows which the banks have got, I think it's very, very critical. They will come down. However, yes, the repo rate going down would have enforced and kind of expedited that. Now that we see today that the repo rate has not gone down, I think we were expecting an instant relief. That's not going to happen, but the banks will have no choice but to reduce rate of interest. So we are still hopeful it will happen. Now it will happen at the bank level. And with the CRR, being brought down, the condition which had been put till 10 December having gone, that will further increase liquidity in the market.
One important step on announcement which has been made is that incremental CRR requirement, so that has been withdrawn from 10th of December. So that gives some elbow room to the bank for bringing down MCLR, and whenever ELCO meets, we will analyze all the data, the cost aspects, and take a decision about how much MCLR can be reduced. So the deposit rate on the bulk side, 1 crore and above, we had cut quite aggressively. So on the deposit side, there is no problem as of now. The CASA ratio has gone up. Of course, it's not going to be on a permanent basis, because as the currency in circulation, it goes up, there will be an outflow of funds from the current and savings account. But for the time being, whatever benefit is available to the bank, we will try that we pass it on to the bottom.